Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Digital Brand Media and Marketing Group, Inc. Quarterly Report. Digital Brand Media and Marketing Group, Inc. trades at a lower price-to-book ratio of -0.11 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company exhibits a very high leverage profile, with liabilities accounting for 14,067% of total assets. This elevated debt level warrants heightened caution, as it may limit financial flexibility and increase risk during economic stress. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This also raised the question if that management is diluting shareholders to sustain the business. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The Digital Brand Media and Marketing Group, Inc. offers a range of marketing consulting and advisory solutions to businesses in the United States and Great Britain. At its core, the company provides digital analytics services, which enable clients to track and measure their online performance. Additionally, it offers search advertising services, including setup and optimization, allowing businesses to reach their target audience effectively. The company's service portfolio also includes management services, ensuring that clients' marketing efforts are running smoothly and efficiently. With a strong presence in New York, the Digital Brand Media and Marketing Group, Inc. has established itself as a trusted partner for businesses seeking expert guidance on digital marketing strategies. The recent surge in Digital Brand Media and Marketing Group, Inc.'s DBMM stock price by over 37.5% in the past year is a result of several strategic announcements and events that have generated positive market sentiment. One key factor was the company's announcement in January 2025 that it aimed to make fiscal year 2025 its best year ever, driven by its digital clarity brand and accelerated strategy. This projection, along with the initiation of pilot projects using its proprietary DCIE platform, likely boosted investor confidence. Another significant event was the company's debt reduction in fiscal year 2025, which resulted in a gain on extinguishment of debt totaling $739,415. This action not only reduced liabilities, but also positively influenced investor perception. Furthermore, DBMM's strategic pivot to an AI-powered consultancy has been well received by investors, as it leverages artificial intelligence for client transformation and growth. While these events have contributed to the stock price appreciation, it is essential to note that the company still faces significant financial challenges, including decreased revenues, increased operating losses, a weak balance sheet, and explicit going concern warnings from its auditor and management. The stocks trading on the OTC markets also means that percentage fluctuations can be influenced by speculative interest. The net income of the company experienced a slight improvement in its financial performance. Despite decreasing from a net loss of $355,014 to a net loss of $305,414, this change indicates that the company is moving towards profitability. However, the profit margins remain negative due to increased costs. A closer look at the revenue growth reveals a 62% increase, which is promising. Nevertheless, the cost of revenues rose by 50%, outpacing revenue growth and contributing to the decline in net income. This disparity suggests that the company's expenses are not being efficiently managed, hindering its ability to turn a profit. The operating income/loss also remained negative, increasing from -$128,743 to -$153,068, further emphasizing the need for cost control measures. The company's financial performance indicates a notable reduction in its debt burden. Specifically, the interest expense has seen a significant decrease of 20%. This decline is evident from the latest financial data, which shows that the interest expense decreased to $152,971 for the 3 months ended November 30, 2025. This substantial drop suggests that the company's efforts to manage its debt have been successful, resulting in lower interest expenses and a more stable financial position. The management's outlook on the company's performance is one of mixed results. On the positive side, the company has experienced significant revenue growth, with a notable increase of 62% compared to the same period last year. This indicates that the company's products or services are in high demand and its sales strategies are effective. However, despite this revenue growth, the company continues to face challenges in achieving profitability. The operating loss of $153,068 and net loss of $305,414 for the 3 months ended November 30, 2025, suggest that the company's costs are still too high or it is not optimizing its pricing strategy effectively. Management will need to address these issues if they want to turn a profit in the future. That concludes the financial summary for Digital Brand Media and Marketing Group, Inc. Feel free to comment below, and I will be happy to answer them when possible.